What's going on, you guys? This is Brandon from Vegas, and as always, we're joined by Boomer Bill. And today, we are going to discuss why real estate investors spent $1 billion buying homes in Las Vegas this summer. I'm joined, as always, by our mortgage expert, Mr. Bill Gaylord. How you doing today, Bill?
I'm doing awesome, Brandon.
I like the flow. I like the Grizzly. It's looking real tough, real Iron Man. I'm feeling that. So let's dive right into it. In the summer of 2024, real estate investors spent over $1 billion at an average of $420,000 per house buying homes in Las Vegas. For those of you good with math, that's around 2,400 homes purchased.
By investors.
By investors. That is the highest in the country at about a 28% clip. This is higher than Seattle in second place and San Jose in third place. Now, Seattle and San Jose make sense. We are talking about tech capitals. We're talking about financial capitals. We're talking about Silicon Valley, Starbucks. These are areas you expect to have high investor. Las Vegas is interesting because the price of home compared to Seattle and San Jose's average median home nowadays is over $1 million.
Yeah.
Seattle is obviously not that, but it's close. Whereas Las Vegas is at $420,000. A large reason we have such a high amount of investment.
Yes.
A UNLV study from 2023 found that corporate investors own approximately 15% of Clark County's housing, and in North Las Vegas, it's around 25%.
That's a lot.
Yes.
In North County.
Yes. Now, Bill.
Yes.
What do you think about this?
I've been here 7 years now. I absolutely love Las Vegas. I think Las Vegas is going to be another Phoenix. I think we're 25 years behind Phoenix, and it's going to be, everything's coming here. We have so many visitors, I think it's 40 million visitors a year that come through Las Vegas, and people are discovering it. It's not just a strip, and I think this place is going to grow. We're going to have Hollywood East coming, or Hollywood 2.0, whatever you want to call it. You got the baseball team coming. You have the football already. You're going to have an NBA team. I think that this is a place that's just going to continue to get bigger and better and faster. The airport is easy in, easy out. There's direct flights from everywhere. It's just a great place to be.
Yeah. I think the investor purchasing in Vegas, and I actually made a comment. There's a post flying around Instagram right now from an account called Real Vegas Locals, and it's kind of discussing this. And a lot of locals are giving their feedback. And I left a comment there that's taken off a little bit, where I said, I get 6 or 7 calls. In fact, I have to mute my phone during these podcasts because I'll get 6 or 7 calls or texts from investors a day, different investors who rip my number from Zillow, Realtor, whoever sells real estate data. They'll just blow up our phones. Hey, we're looking to buy a property. Hey, I'm looking to buy a property. Hey, my guy's looking to buy property. You got anything? You got anything? You got anything? And I'm like, dude, no, nobody's got inventory like that, right? And the reason investor purchasing is such an issue, and it makes me sad that we allowed it to happen, is the natural state of real estate, the natural order of things is you get married, have a kid, buy a home, because obviously the apartment's not going to work for the kid and the dog, right? You buy a home, have another kid, buy a bigger home. Your kids leave for college, you downsize to a smaller home. You get divorced, you need to split up homes. Someone dies, you need to sell your home, right? This is the natural order of real estate. It follows the natural life cycle of human beings, where constant change, big moments occur. Real estate follows that. When investors spend $1 billion buying 2,400 homes, those homes aren't going to hit the market. Not in the natural order of things. Maybe if that company goes under, or maybe they need to liquidate to buy, the stocks of vegetables in Iowa or whatever, right? Maybe then we'll see some change. But for the most part, these are houses that are never going to hit the market again. It takes them off the market, which puts an even tighter stranglehold on our inventory.
Well, I think they look at it, and we've talked about it for many months now. It's supply and demand.
Yeah.
Right? There's just not enough supply of homes for it to go around. And so investors they're investing their money, correct?
Yeah.
So they're going to try and invest it in an area where they see opportunity. And I believe that because of the opportunity in Las Vegas with really just not a ton of supply, and it's not going to be growing anytime soon. I mean, it's going to continue to grow a little bit, but it's just a good opportunity for people to get in. And then the economy in Vegas is going to get better.
Sure, but as the economy grows, that's just going to incentivize them to buy more houses, right? Incentivizes investors to buy even more houses because they're going to see more renters, right? And my ultimate question is, where's the end line for this, right? What's the end goal here? Do investors just own all the houses and we go back to renting from them? Is that our goal here? Is that healthy?
Yeah, I don't think that's the goal for anybody. I think it's really we would love to
their
have.
Goal.
Well, it would be their goal because they have the opportunity to do it, and they're willing to take the basically take the jump into the marketplace. And when some people are like, I don't know if this is a great marketplace, the average homeowner, the average home buyer, it's tough right now, affordability wise. Some can afford it, but they're just not willing to make that leap in.
You know what would make it easier for these first-time home buyers? If 2,400 of their houses weren't owned by people who own multiple houses.
So how do you stop that? I don't know how you're going to be able to stop that.
I'm so glad you asked me that question. It's like you're teeing me up for this. I actually, on the Instagram post, and you guys can go check it out. If you head to Instagram, Real Vegas Locals, I believe that's the person who posted it. I posted what I believe are two very common sense solutions. They're going to make people mad, but whenever you're trying to institute change for the little guy, you're always going to make the big guy mad, right? There's no way around it. The first common sense change to me is some sort of redaction or alteration on FIRPTA. Now, for those of you who don't understand what FIRPTA is, that's because they don't teach these things in high school. Somewhere in the late 70s, 80s, it's called FIRPTA, Foreign International Resident Property Tax, blah, 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 blah. Long story short, if you're a foreign international, you're allowed to purchase a home in America as long as when you go to sell that home, you pay a 15% tax to the U.S. government. So the U.S. government profits from the sale of the home, which is smart for the U.S. government because they know the foreign international will buy the house, maybe sell it 10 years later. It'll have gained equity. They'll get 15% on that. What does that do for the American public, though? The American public doesn't profit from that tax, right? We don't see that 15% return. It goes to the U.S. government. So some sort of repeal on that, or maybe some sort of when you sell, maybe some of that percentage goes to the buyer, whatever, something. Whereas the only people who are profiting are the foreign international and the U.S. government from the tax.
So the allocation of the funds after they sell should go somewhere else.
Sure,
go to the local market. Is that what you're trying?
Make them pay the 15% upfront. Make them pay the 15% upfront, and make it so that the buyer, right, someone in the purchase who resides here in America benefits from it rather than the U.S. government benefiting. Because right now, that's the only people who benefit are the foreign international who gets to buy property in America, the most valuable land in the world, and the U.S. government who gets their 15% tax when that house is sold.
So the local markets gets
nothing.
Screwed, yeah.
And the average American, if you ask them what FIRPTA means, they have no clue. When we have clients, we had to tell them in the real estate contract, there's a section at the bottom that says, is this a FIRPTA purchase? No one asks about it because no one knows what it is. We have to do research to make sure that each sale. And when I explain to clients, hey, this is a FIRPTA house, what does that mean? Well, it means when they sell the house, 15% of it has to go to the U.S. government. They're like, so nobody here gets any of that? No, they don't. So some sort of repeal on that, right? Either the American public needs to profit from these foreign international purchases, or we need to restrict them, eliminate them, something. Because right now, if you're a foreign international, your country's real estate market probably isn't going up 7 to 8% the way LA is. And it's just more valuable for you to purchase homes in America than where you're from. And that's not fair. That's not fair to the American public.
So how about the 1031 exchange? Because they go from property to property, investors go from property to property, delay. Is that something that you think could be changed?
Well, now you're leading to number two.
Okay. Oh, I didn't even know that.
You lean in number two.
Yeah.
There
okay.
must be a higher tax and or penalty for those people purchasing homes after the second home. Okay? If your mom and dad, grandparents, whatever, you've owned a home, you want to rent it out and buy your final destination home, that's fine. Cool. Whatever. I'm not here to penalize people for having second homes. Okay? But once you get into third, fourth, fifth, seventh, 20th, 30th homes, we need an increasing tax on that. Whether it's a higher down payment, a significantly higher interest rate, higher taxes, whatever the penalty may be. Again, I'm not a lawmaker. This isn't my forte. But right now, it is simply too easy for a large hedge fund to start a real estate LLC, right? Buy $1 billion worth of homes, abuse the same tax loopholes they abuse in all other facets of the economy, avoid paying taxes, and the American public is, as always, is stuck footing the bill. That's unhealthy. It's wildly unhealthy.
Well, and I agree. I mean, I've bought investment property myself, right? And there's different ways that you can go about doing it, and there's definitely some advantages to it. And by buying them and the depreciation that you write off and that kind of stuff. But at the same time, it is taking homes away from the average person, and it's difficult for those people to get in.
Being a landlord is like being a house pimp. You're taking valuable assets off the market, leaving other people devoid of something that they sincerely need, right? And I always tell people this: if landlords are the house pimps and houses are the ladies of the night, right? There has to be some tax against the house pimp for how many ladies of the night that he has under his employ. Like, there's just, as it currently stands, 2,400 houses is a lot, Bill.
That's a lot of homes.
That's a lot of homes. That's an entire new build. That's an entire community.
It's a huge community.
That's insane, right?
Yeah.
That's Inspirata. You've literally, that's an entire master planned community that investors own and will never sell back to the public. That means they get to control the rent in those houses. That means they get to raise the rent in those houses. At 15%, investors can now kind of create their own rental control where they get to, hey, all the houses in this area, the rent's now $2,200. They can control the competition, right? Or they can undercut the market from, let's say, your mom and pop. Let's say your standard mom and pop investor who maybe owns 2 rentals, and they've priced their rentals fairly. Okay. The billionaire hedge fund guy can go, well, shit, I'm going to undercut you by $200 a month because I can afford to take the loss. Now that investor is pushing the mom and pop out of the market, right? So it's creating the same problems we're seeing everywhere from cannabis to coffee. When you allow billionaire hedge funds to control and dictate the market, and tech companies to dictate the market, they can outspend, take the loss, and just take over a market. We see it with tech companies taking over Uber. We see it with Uber Eats. Every facet, they're willing to take billions of dollars in losses to push other people out of the market. And I think it's unhealthy everywhere, especially in real estate.
Yeah, I see it everywhere too. And I was just reading an article about Elon going to a small town in Texas and building a lot of stuff up there. And what's ended up happening is a lot of the locals are having trouble finding housing that they can afford because the people coming in with the money are just they're outspending.
Of course.
They're basically outspending. So it's driving up everything. And that's what's happening here in Las Vegas is that the housing prices are going to go up.
It's insane.
It is insane.
It's insane. They just recorded now that the median price in Las Vegas is now pushing $475,000, right? In 2019, we were still struggling to hit $400,000 as an average price margin. That's a large jump in 5 years.
So should a potential home buyer not become a potential home buyer and just stay renting?
The opposite, right? Investors, until lawmakers do anything about this, which they're not incentivized to, right? I go back to the King of England. The King of England wanted to collect taxes from as many people as possible. So he created lords who owned the land and would collect taxes from the peasantry, your smiths, your cobblers, your sword makers, your bakers. He would collect taxes from them to lease the land. That's why they're called landlords, right? The King of England would always reward the lords who generated the most taxes. Okay, well, if you're an investor, a billionaire hedge fund investor, right? And you've got 2,400 properties and you're paying property taxes on them and you're generating rental income from them, which you're now donating back to these same lawmakers and politicians, you're generating so much money for the King of England or the US government that they're incentivized to let you buy more, right? You're generating more income than the average retail buyer would. So why would they not? Right? And this ultimately goes back to the same problem as FERPTA. If the only people profiting from the system are the large corporations and the government that they donate to, where does the public win? Where does the public get, where's their benefit in this?
So what happens? What do they do? I mean, do they like
Buy now.
Because we're certainly big on home ownership, right? Home ownership allows people to build wealth.
Yeah.
And if the investors are going in and building their own wealth, people need to understand that that might be a pretty good opportunity to get in.
Yeah.
It's just hard from the affordability standpoint and the mindset of, is this what I really want to do? And people talk about renting. They can rent now for less than purchasing.
Sure.
In many different cases and where they want to be.
Short-term less.
But it's a short term.
Yeah.
It's a short-term situation because as time goes on, the rents, if you look at that rental graph over the last 40, 50 years, it's just pretty much straight up.
100%. They have to buy now, to answer your question earlier about what people should do. If lawmakers aren't going to change this, the only option is to follow the money, right? If investors are going to keep spending billions of dollars, then guess what? That means as a homeowner, the price of your home is going to keep going up, right? You're actually more incentivized. And it seems counterintuitive. Oh, Brendan, the price of homes are going up because billionaires are buying all the homes. What should I do? Buy homes.
Buy home.
Right? It seems counterintuitive. But when you think about it as a long-term play, okay, if the average price of the median price of the Las Vegas home has gone up $100,000 in 4 to 5 years, well, if you had bought a house 4 to 5 years ago, you'd be up $100,000, right? And it's hard for people to look at it that way. People are so stuck because people don't have the financial education. They focus on the cost instead of what something would make.
Well, they look at the here and now.
Yeah.
They're very myopic.
Yeah.
They're very like, this is my situation right now. This doesn't make sense for me right now. What they don't always look at is that real estate is long-term.
Yeah.
It is a 7 to 10 year proposition in most cases. And I'll bet that if they looked 7 to 10 years behind where they were to get to the point where they are right now, their life's a lot different than it was 7 years ago.
Yep.
And probably a lot better over that 7-year period. So sometimes to me, everything's like a calculated risk. You got to take the opportunity when the opportunity is there.
100%. Calculated risk is the best thing because everybody wants us to have a crystal ball where we tell them, here's exactly what the interest rate will be, and here's exactly where you're going to make money. Here's what I tell people. If billionaires are dropping $1 billion on houses, follow the money, right? What better crystal ball do you need than rich people spending $1 billion, right? Oh, I'm afraid. Okay, are you more afraid than the guy with $1 billion on the table, right? Like, I get it. I'm not ever one to say that a down payment is like nothing, but these people are putting down billions and they're not afraid. So why are you?
So were you afraid when you bought your first home?
No, I've never been more confident about anything other than marrying my wife. There's nothing I've ever been more confident about than buying that home. I, in fact, bought the most expensive home that I could afford because I'm that confident in the real estate market in Las Vegas continuing its rise, right? I put my money where my mouth is.
And you're in it.
Oh,
I mean, I bought and sold 28 homes over my lifetime, right? And I also, when I go into these things, it's like, oh, why am I doing this?
Mhm.
This is, should I buy this now? Am I going to lose it? And I've lost money on real estate too.
Sure.
So, but it is a calculated risk. It is a long-term investment and it's something that you can get in. And the other thing is people, if they can make that payment and they understand that their income is likely going to go up, what are the options for them if things go awry? The value of the property could go up.
Mhm.
They could rent the property out for
Sure.
probably at least the mortgage payment.
Mhm.
They could basically have family move in and offset the rent. They could get a roommate. So on a rent, you can't really do any of that stuff.
No.
You own the property and you have a lot of options with that property if something goes awry. So I look at the calculated risk. Is it worth that risk? And can I sleep at night?
100%. Bill, do you have any final thoughts on investor purchasing in Las Vegas before we move on to real estate Mythbusters?
My only thought is basically the billionaires are buying property for a reason.
Mm-hmm.
And the reason is they see it as a very good long-term investment.
Yeah.
And so if they're thinking that it's a good long-term investment, it's probably a very good long-term investment for individuals similarly.
100%. What if Las Vegas is higher in investor purchasing than tech forward cities like Seattle and San Jose? That means they see those industries coming to Vegas.
It's happened.
Right.
This is place. I love this place, Brandon. You know it. This place is so awesome. And
Yeah.
it's just going to get bigger and better and faster and stronger. Some people don't want it bigger, better, faster, stronger, but it's a reality and it's going to happen.
Yeah. He's 100% right. People are resistant to change. As we tell you guys, every time we turn on these cameras, every time I go live, I tell you guys the same thing. If you're a Las Vegas local, if you consider yourself a Las Vegan, buy a home as soon as you can. Every year I tell you guys this, and every year these homes get more expensive. They go from $425 to $450 to $475. They're not going up cheaply. They're going up very fast. Even in a down market like last year at the highest interest rates in a decade, we saw a 6% housing increase in Las Vegas. That's not going to slow down. Buy a house as soon as you can. Do everything in your power. Save as much money as you can. Make this your number one priority, because I'm telling you, these billionaires are not going to stop buying in Las Vegas. You've been warned.
One more note. Fannie Mae just came out with a new survey asking 100 of the nation's top economists, industry individuals, where they think values are going to go next year. And they just raised the number by 0.6% from last quarter. So it's happening. Values are going up.
It's happening. In fact, we
It's
should
not
send
going
me
down.
that article. I want to include that into the YouTube video below. I think that's good information for people who want to read through and actually learn something.
Yeah.
All right. It is time for our favorite part of the episode. We call this Real Estate Mythbusters. Real Estate Mythbusters, where once a week, there's a lot of myths surrounding real estate because of how little they teach you guys, what your Uncle Joe taught you over Thanksgiving one time, passed down from family to family. There's a lot of myths in real estate. So we are the Real Estate Mythbusters, right? And when I do like this, Mythbusters is gonna come across the screen all magical, like, yeah, like that. Mythbusters, yeah.
This is in camera.
Real Estate
Do I need to get
Mythbusters.
into my...
Hold on, Bill's changing.
Bill's changing.
All right.
Yeah, put the screen up so you can
So we're doing practical effects.
Mythbusters. Look at the
Hurry up,
CG.
Bill.
Look at the CGI magic that's going on around here, guys. Mythbusters.
All right, Bill's ready. Oh wait, you got 5 more time. Play some effects.
We're busting myths here.
You hear that?
Mythbusters. I like that.
There he is.
Boomer Bill is joining us today, guys. Boomer Bill is in the building. We are gonna bust some myths with Boomer Bill. I like that. Busting myths with Boomer Bill. The myth that we are going to bust today
This sounds bad.
is that first-time home buyers and teachers get some sort of special down payment? Bill, do you know how many people reach out to me and they're like, well, what's my down payment if I'm a first-time home buyer? What's my down payment if I'm a teacher? Right? And I'm like, dude, everybody's down payment is the same. Are you using an FHA loan at 3.5% or conventional? So Bill, please help us bust this myth. What are the down payments, whether you're a first-time home buyer or a 50th time home buyer?
So FHA is always the same, 3.5% down, whether you're a first-time home buyer, second-time home buyer, a fifth-time home buyer. Now, conventional, a little bit different. You can do 3% down on a conventional loan if you are a first-time home buyer. If you're a second-time home buyer, it's 5% down.
There you go. But no matter what, even if they're a first-time home buyer, even if they're a teacher, a firefighter, you're going to get 3.5% or 3% conventional if you qualify.
Correct.
The only group who gets a special down payment is who?
The VA vets.
I'm going to repeat this again. The only group that gets special down payments is who?
Active duty military and VA veterans.
Guys, if you put your life on the line for this country, if you serve this country with your life, they will decrease your down payment. That's it. The only way you get zero down payment is if your life's on the line. Welcome to America. That's just how the game works, right? Teachers, especially in Las Vegas, have a program where they'll provide you down payment assistance or closing cost assistance. That's why a lot of teachers are incentivized to move to Las Vegas. First-time home buyers, we do have down payment assistance programs for them, but your down payment itself is still the same thing. You're still getting 3.5% FHA or 3% conventional to 5% conventional. All right.
Yes.
Myth busted. I don't care what your Uncle Joe tells you over Christmas.
Or your boomer Bill.
Or your
granddad.
boomer Bill granddad who bought his house in the woods in 1957 for 87 cents and a handshake. Okay. In the modern world, 3.5% or 3%. Those are the down payments you're looking at.
Can I also add to this? There's also a myth that that's all they need.
Yeah.
Okay. Can I throw this out there?
You want to do two myths busted in one?
Yeah.
Let them have it.
So basically, so I talk to people and they go, well, I got enough money for the down payment. Well, have you considered closing costs?
Sure.
Right. And closing costs in general are going to be about 10 to 12,000, no matter what kind of transaction you have. There's certain ways to get it, to do it. But in our talking today, this is a time where sellers are actually willing to negotiate on seller paid closing costs.
You know what? No, Bill, this is too good.
You can't get in, you can get into the game by having the down payment. Okay. But you can then go find a house with Brandon and he'll negotiate the seller paid closing costs.
Bill, that's
Yes.
such a good tip that's going to be an entire myth. We're going to save that.
Okay.
At Austin, that's next week's Mythbuster, because we can literally have a closing cost sheet on screen for people and go down literally what their closing costs are.
Yeah.
I think that would be fantastic. That's a huge myth bust, because we haven't even factored in how much you need for moving costs, furniture, all that stuff like that. I think that's a huge that deserves its own segment. I don't want to waste it as like an extra on this one.
But they're in the game if they have the down payment.
100%. 100%. Bill,
Yes.
as always, I want to thank you for being here. Please let the people know where they can find you.
Go to billgaylord.com and you can schedule a free consultation. We'll go through what's called a CIA analysis, credit income assets, and you'll see what your numbers are and we'll get you into a home.
Yep. As always, I'm Brandon from Vegas. You can find me pretty much anywhere in the world.
He's everywhere. He's everywhere.
TikTok, Instagram, Facebook, YouTube, Google, whatever. Type in Brandon from Vegas. The information will pop up. If there was a question we had today that you guys didn't want answered or wasn't answered, please leave it in the comments below. Let us know what you guys think. How do you guys feel that investors are buying $1 billion worth of houses in Las Vegas? Do you think this is good for us? Do you think it's a good signal for the economy? Do you think it's bad for locals? What do you guys think? Let us know in the comments below. As always, we read and respond to every single one of those. We thank you guys for your time today. And as always, come and be my neighbor.